for joining in, and let's pose that question to Ashi Anand, the founder of IME Capital. Ashi, good morning. Thanks a lot for joining in. The telecom space now is buzzing with the Vodafone Idea fundraise and a lot of these earnings also coming out. With this recent turn of events with Vodafone Idea, does it give you a confidence that this Indian telecom market is now going to remain as a 3+1 market? And also, what's your call on this space?
So I think one, just broadly with the Vodafone IPO going through successfully, yes, we are looking at a 3+1 market. This does have implications in terms of, earlier there were some hopes of it moving towards a 2+1 market, more from a specific company perspective. So in a three-player market, I think the core call is really what happens in terms of ARPUs and pricing discipline across different players. You've had an extended period where pricing in India was extremely subdued. Data rates in India are amongst the lowest in the world. Are you now going to move towards a period where players start being a little more kind of pragmatic in terms of pricing, and you really start seeing ARPUs moving up? I think the overall street expectations are that yes, given the fact that there are large 5G spends which have been kind of undertaken, you do need to generate ROEs on those spends. That you are going to see pricing continue to move up. Some of this is already being priced into overall numbers. But in terms of the actual pricing momentum, this is really something that we do have to see, because similar to what I think Remo was just talking about, Jio does seem to continue to be aggressive. And that has really been the key player which has been spoiling the market in terms of pricing. So how pricing evolves going forward is really the key call in terms of what is the overall outlook on stocks in the sector.
Ashi, hi. I know Zomato is a much-loved stock for you. It's one of your largest holdings, and every time you come, we ask you your view on Zomato. But this time numbers were very, very strong. There is no taking away. Blinkit turns EBITDA positive in Q4 at least at the EBITDA level. But the stock price reaction was fairly tepid. It looked like all the good news was already in the price. Your thoughts on Zomato, if someone has a 3 or a 5-year time horizon, is 200 rupees still an attractive entry level?
Yes, I think undoubtedly so. We continue to be very, very positive on Zomato. And it's important to understand the underlying fundamental reasons that actually make us so positive. So this is a company which has already been 3x for us in our portfolio. And we actually bought into this at the lows when I think our core call was that the street is underestimating the sheer pricing power and the number of levers these companies have to improve profitability once they decided to move into a monetization phase. What I think you've very clearly seen over the last 3 to 4 quarters is quarter after quarter, Zomato has actually been surprising on the positive in terms of profitability. And this is something that we believe as you go forward 2 or 3 years, this trend of positive surprises on profitability will continue. Now, to understand why that is happening, these companies tend to spend a tremendous amount in the initial growth phases, where they're just focusing on getting customers onto their platform. But once they have customers who are on their platform without other alternatives, is really when you can start tweaking a lot of monetization levers. So if you're just understanding how is Zomato moving towards profitability, it's the introduction of delivery fees, it's the reduction of counts. Something like a platform fee has a big swing in terms of overall EBITDA. There's a small nuance which both Swiggy and Zomato have introduced around saying that you could now have a slightly cheaper rate if you don't have a dedicated delivery partner, but you actually share the delivery partner. This is something that can improve costs significantly. There are multiple levers, and basically as Zomato keeps flexing these levers, consumers who have gotten used to delivering food, ordering food and getting food delivered, don't really have a choice. So even as you end up paying a little more, you aren't going to let go of food or ordering food just because of this. So this is one element, and this is the core business. But the other very interesting part of Zomato is just how well Blinkit has been doing. A year and a half back, Blinkit was considered a major headwind in terms of spends and is it going to be profitable? I think across the board, Blinkit has actually outperformed both in terms of growth, and you already achieved adjusted EBITDA break-even on Blinkit in the last month. This is a space which Zomato is actually indicating GMV could be higher than that of the food delivery business. So there's just multiple different elements of growth, of profitability, all of these are stacking up really well. And it's not just Zomato. We see this across multiple other digital platforms where we believe the street is going to be kind of a surprise on the upside, both in terms of underlying growth and profitability. And therefore, we believe that kind of good run will actually continue. Just a last point
Yeah, go ahead.
yeah, just a last point in terms of the subdued reaction to the result. When you've gone up 3x in a year, you are kind of factoring in some of the near-term momentum. So it is possible to see a bit of a breather, but I think the long-term story continues to be very strong.
Ashi, all is well if you've bought in at the lows like you did, right? But would you recommend buying Zomato at current levels?
Yes.
Have you increased your weightage in this stock recently in your portfolio?
So it's already a substantial weight, right? So it is the top weight in our overall portfolio.
Yes.
But in terms of as long as you have a 3 to 5 year time horizon, we believe even from current levels, there is substantial money to be made, primarily because companies like Zomato are basically growing. See, there are not too many companies or industries in India that have an ability to compound revenues at 25% plus with an ability to also improve profitability. And our very clear call is that 3 to 5 years down the line, if you look at the levels of margins, the cash flows, and the overall profitability levels of these companies, they're going to be very high quality franchises. If you just build out 3-5 year models, look at the kind of growth which is coming in, both in revenues and profitability, we are very comfortable even at current levels.
Well, Ashi, there is another sector that has been the sector of the week actually a couple of them. One of them is capital goods, the other is defense, and you have holdings in both of them. I see your portfolio, you have ABB, Thermax, Bharat Electronics as well. What gives you this conviction to stay positive on both these sectors? As a matter of fact, there was a report recently that mentioned that HAL is likely to triple its order book by FY30. What about the other stocks like HAL, Siemens? What's your view on both these spaces?
So we are very positive, and just to kind of understand, you're coming off a decade of kind of weakness in this overall space, right? 2010 to 2020, you really had virtually no capital formation taking place in India. We believe that there have been multiple kind of underlying changes that have happened at an economy level. The reduction in corporate tax rates, various forms of PLI incentives, a very strong shift that you're seeing away from China in terms of a value chain migration. You are seeing an overall revival of the capital goods sector. And we believe this is actually a multi-year cycle. The amount of the value chain that exists in China that could potentially move towards India, the amount of global companies that are trying to de-risk their value chains, India becomes very strategic, both from a value chain de-risking globally, as well as a very, very attractive local market for these MNC peers, etc. So we believe that across sub-segments of kind of capital goods, right? So be it electronics, be it clean energy, there might